Welcome to the third episode of our Luno trading series. In the last episodes, we covered the basics of crypto trading, and we dived into some of the strategies traders and investors employ, from hodling to day trading. If these strategies are going to work though, you need to analyze the market, and that's what we're going to dive into today. At the end of the day, if your goal is to make a profit, only one thing really matters: buy low, sell high. Of course, that simple statement is a lot easier said than done. No one can predict the future, not even Elon Musk. If they could, we'd all be rich. So the key is to identify when the lows and highs are more likely to come. To do this, there are certain methods of market analysis that crypto traders and investors commonly use in their decision-making process. The two most common forms of market analysis are technical analysis and fundamental. Both have their limitations and schools of thought against the theories. But used in the right way, with logic, they can help you to make more informed trades. Let's start off with technical analysis. So, what is technical analysis? Technical analysis is built on the premise that history repeats itself. It focuses mainly on historical market data, such as trading volume and past pricing trends, essentially fear and greed. With technical analysis, you look at this data and use it to build a clearer picture of the market sentiment by identifying patterns of repeat behaviours. Are people buying or are they selling? Are they acting out of fear or greed? We're essentially trying to figure out what people did and use this to predict what they will do. This can help you to make calculated predictions about when the market will be bearish, trending down, or bullish, trending up. This method of analysis essentially assumes that price movements aren't random and that past patterns will hold in the future. But the thing with assumptions is, any number of factors could have influenced the price to move in a specific direction. Technical analysis only really looks at supply and demand and the price of a coin. As the price goes up, you can expect it to become bearish at some point as people try to capitalize by selling their coins. And the price will fall as other traders try and get out, believing it is the best price they will get. And so the cycle continues. If used correctly, technical analysis can certainly form a pillar of your thought process, and some traders swear by it. At the same time though, you can't predict the future simply by looking at the past. Which brings us to fundamental analysis. Fundamentals is more of a big picture approach, like who is running the company or the business behind an asset, what their reputation is, who their competitors are, and looking at the overall industry in general. For example, if you judge the intrinsic value to be lower than its current market price, you can trade accordingly, and in theory, make a profit. You can also look at things such as transaction volume and user activity to gauge consumer demand, as well as retail adoption. And of course, finally, global economic events can exert a powerful influence on cryptocurrency prices. It is important to incorporate these economic shifts when using fundamental analysis in a trading strategy. This includes both scheduled and unscheduled events like the Bitcoin halving or government intervention. A highly publicized and important crypto-related event, such as the halving, for example, has a clear impact on the future supply rate of the currency. You can plan for this and incorporate it into your models. Equally, an unscheduled event could have an even greater impact. This is obviously harder to take into account, but you still need to know how to respond to such an unplanned events, if and when they occur. When it comes down to choosing which techniques to use, a combination of both is probably a good idea. If you do decide to start trading, make sure to be cautious during this phase and never invest more than you can afford to lose. Do your own research. The more you know, the more successful you will be. Remember, this is an art. No one gets it on their first tries. Don't forget to subscribe and smash that bell so you never miss a thing. And as always, #to the moon.